All right, today we're going to talk about a really fascinating trading strategy called the 0DTE Breakeven Iron Condor. But honestly, what makes this so interesting isn't just the strategy itself. It's the personal journey of one trader who used it to find his way after some, well, pretty major struggles. Let's get into it.
And that journey really starts with a puzzle, a total head-scratcher. How on earth can a trading strategy that loses way more often than it wins actually make you money in the long run? I mean, that just sounds completely backward, right? Well, that is exactly what we're going to figure out.
To get to the bottom of it, we're going to look at the actual data. A trader named Einar Sandvand placed this many trades, 2,582, using this one specific strategy. So, we're not talking about a small sample size here. This is a system that's been tested in the real world over and over again.
And across all of those trades, what was his win rate? A measly 40%. That means he was losing 60% of the time. This really gets right to the heart of the puzzle. How do you build a profitable portfolio when you're wrong more often than you're right?
Well, the answer is really in the story of the trader himself. To get the strategy, you first have to get the journey that led him there. This wasn't some kind of overnight success, not at all. This was forged in the fire of the markets.
And his portfolio chart, man, it tells the whole story. You look at 2020 and you see these massive, painful losses. The kind of stuff that makes most people just quit trading for good. But then, in 2021, something starts to shift. He starts to find a way. And by 2022 into 2023, you see it, that steady, consistent growth. So what was the big change?
This right here was the light bulb moment. After getting hammered by the market, John had a huge realization. He had absolutely no edge in predicting where the market was going next. And let's be honest, most people don't. So he just gave up the prediction game entirely and started looking for a strategy that didn't depend on him being some kind of market psychic.
So, what was the solution? To get it, we need to basically take apart the name of the strategy itself, the 0DTE Breakeven Iron Condor. So let's pop the hood and break down each piece to see how it all works together. First up, 0DTE. All this means is 0 days to expiration. We're talking about options contracts that you open and that expire on the very same day. They're super short term and they've gotten incredibly popular with traders because, everything happens so fast. Next, what's actually being traded here? Well, the strategy is all about SPX, which are options on the S&P 500 index. Now, a couple of key things here. It's super liquid, which means it's really easy to get into and out of trades. And it's cash settled. This is huge because it means you never have to worry about ending up with actual shares of a stock.
And finally, the Iron Condor itself. Okay, it sounds really complex, but the idea is actually pretty simple. Imagine you're putting up two fences, one above where the market is now and one below. An Iron Condor is just a bet that the price is going to stay between those two fences until the end of the trading day. You're not betting on which way it'll go, you're betting on it not going too far in either direction. You're betting on it staying in a range.
So, how do you build these fences? You do it with 4 different options trades at once, sometimes called the legs. To set up your top fence, you sell a call option and then buy another one a bit further away. For the bottom fence, you sell a put option and buy another one a little further below that. You do all 4 of those at the same time, and bam, you've got yourself an Iron Condor.
Okay, so now we get all the individual parts. Let's put it all together and look at the specific rules John came up with to trade this thing, and how he turned that 40% win rate into a winning system. Here are the guts of the strategy. For the entry, he puts on the trade where there's a really low probability of the market actually hitting it, around a 5 to 10 delta. You can think of delta as a rough percentage chance of that happening. Now, for risk management, and this is absolutely critical, he immediately sets a stop loss. That loss is set at the amount of money he collected for opening the trade, called the premium, plus a tiny little buffer. And for the exit, it's simple. He either gets stopped out for that small, predefined loss, or he wins and closes his trade when its value is almost gone.
And this is the secret sauce. This is how you make money with a 40% win rate. By keeping your losses tiny and strictly defined, your winning trades, even though they happen less often, are just so much bigger. The math from his own data shows his average win was 2.3 times bigger than his average loss. That's the engine that drives the whole thing.
I can't say this enough. The magic here isn't the entry, it's the risk management. He's not doing one big trade. He's doing multiple small ones all day. He never risks more than 1 or 2% of his whole account in a single day, period. He is always aware of his total risk.
That discipline is absolutely everything.
Now, look, no strategy is perfect, right? This number, 3.7%, that represents the rate of double stop losses. This is pretty much the worst-case scenario. It's when the market is so crazy and volatile that it rips up, stops you out, then rips down and stops you out on the other side. It's rare, but it does happen, and it's a risk you just have to manage.
So what's the big takeaway from all this? What's the lesson? It really boils down to a massive shift in mindset, moving away from trying to predict the future and instead just focusing on rigorously managing the present. It's all about discipline over prediction.
So is this strategy for everyone? Oh, definitely not. The upsides are clear. It's designed to help you avoid those huge account-destroying losses, and yeah, it can create consistent profits. But the downsides are just as real. This is super time-consuming. You basically have to be glued to your screen all day. It needs your constant attention. And since you're making a ton of trades, commissions can definitely start to add up.
You know, when John was asked for the single most important habit for success, his answer wasn't some secret chart indicator or a magic entry signal. It was this: keep a detailed trading log. Writing down every single trade, what worked, what didn't, and why. That's the only way you can learn, adapt, and build the kind of discipline you need to actually make it.
And that really brings us to the final thought here. This whole journey brings up a really powerful question that goes way beyond just this one strategy. In the world of trading, and maybe, in a lot of other areas of life, is a repeatable, disciplined process that has a statistical edge more valuable than chasing the impossible dream of a perfect prediction? It's a question that really challenges how a lot of us think about making big decisions.